Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Happy Monday. Today we're going to switch it up, start off with gold. On Friday, it hit our major three-star support head on, 1235, 1236. It's moving back. Our rhetoric, our narrative for the past couple weeks has capitalize on your longs at 1250 and above. Look for that pullback to reposition. And if you did that, you felt very comfortable getting back in on Friday. French PMIs contracted early on. It sent the dollar higher. But ultimately, when U.S. PMIs missed, it became a great landscape for gold. We're heading into the Fed now, a seasonally bullish time of year for gold, especially in January. And we think the Fed is going to be accommodative. They're going to be less hawkish than expected, or even potentially dovish. It's going to weaken the dollar. And it's going to provide a tailwind for gold. And if we start to see it close out above new swing highs, there is still a minor net short position in managed money, and that short position is going to continue to cover. Even so, the longs, they're very under-positioned right now, so we can see a nice tailwind in January up to $1,300. This is go time for gold, and if you didn't get in, don't chase it too much, don't chase it too quick, but really, there's a lot of upside here. Close below 1235 on the week would really diminish the prospects in the near term, but not its potential for January. Moving on to the S&P, we've been talking about it. Pessimism at a height heading into the session, sold off early on, right in the open, but we think that pessimism, talking about positioning, there's too many shorts in the market, the longs are under-positioned, and that's where a tailwind higher can especially come from a more accommodative Fed. A lot of resistance though in the S&P. 2605 was the settlement on Friday, struggling a little bit there. We got our momentum indicators around 2610. If it gets above there, it can start to gather legs. Resistance about 2620 and 2625. Going to be a strong level. Got to get through. Now for the Nasdaq, it's been more of a leader. It did head a lot lower and take out that November Thanksgiving low. Tested the November Thanksgiving low. Sorry, took out that last Monday low, but we're starting to see some momentum. 6670 is going to be a lot of resistance there in the NASDAQ. It is green on the session. Look for that to be a leader. If it can get out above that 6670, then we can start to gather legs too. So those are the levels to watch. Now, the wild card here, crude, starting to slip again. You got different expectations coming out for the inventories over the next 48 hours. That's weighing on things. The overall bad data last week also weighing on things. But there is a bright spot. The rig count fell, and production in the United States, estimated on last week's report, fell 100,000 barrels per day. So there is an opening here that if we can start to just get a better risk sentiment in the market, crude can go higher off this $50 move. But inventory is going to be very crucial here as they come into the picture. Give us a call. We're here to talk about anything, here to help at anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.